This year might just be the right year to invest in property. But before you jump in, do you have a low-rate investment loan pre-approved? It might be the right time to invest, but the wrong loan could dent your prospects for achieving the maximum return. Are you armed with the best finance at the sharpest rate? Find out with Finny. Call us now on 1300 002 023 and find out what you could save. Or visit our website, finny.com.au to book an appointment.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hi, g'day. How you going? Phil Tarrant here, host of the Smart Property Investment Show. Hope you're well. Getting stuck into 2023, enjoying being back in the office, getting stuff done. As you've been tuning into this for many years, we've been at it now for, more than 5 years. And I don't know how many podcasts I've done on the Smart Property Investment Show, but a lot. I've spoken to a lot of property investors. I've spoken to a lot of people that work inside of property, buyers, agents and data people and conveyancers and pest and building people. But one of the guests I most like talking to is mortgage brokers. And the reason why is that if you're just new to property investment, guess what? Property investment is a game of finance. It's all about finance. The finance, your ability to get finance will dictate and determine what you can buy, how many properties you can buy, the value of those properties you can buy, the quality of those values you can buy, and ultimately determine your fate as a property investor. So if you think property investment is all about buying soft furnishings and working out what carpet and what color you're going to be painting walls and a renovation because you watched the block, newsflash, it's not that. It's all about securing money, which gives you leverage, and leverage puts you in the property, and property over time can help you with wealth creation. Pretty simple. It's not sexy. A lot of people will tell you it's sexy. People say, I love property because they get to look after all those things and realize their dreams. They're largely people for owner occupiers. This is a show for property investors. We talk about money. And if you're not comfortable talking about money, switch this off now, because property investment is all about cash. It's all about borrowing. It's all about yield. It's all about the mechanics of being able to manage your investments. And I like talking to mortgage brokers because they are absolutely critical and central to property investors in Australia. The last numbers I saw running up to the end of 2022 is that mortgage brokers now account for about 70% of all mortgage financing. When I first kicked off knocking around mortgage brokers, I remember that number. It was 16%, now it's 70%. So more Australians than not use a mortgage broker for securing mortgage finance. That's a good thing because mortgage brokers give choice. Every single loan I've ever got has been with a mortgage broker. Absolutely critical. I wouldn't be a property investor if I didn't have a good mortgage broker. And I found some new mortgage brokers recently. The gang over at Finny Mortgages, they're in the process of refinancing one of the portfolios within Smart Property Investment, and we cover this on smartpropertyinvestment.com.au. They're going through that right now. I don't know whether I'm well liked over there because I can be a bit of a hard work client because it's a bit complicated, but they're doing a really good job, finny.com.au. What I've done is I've been able to persuade the senior broker to come over, chat with me. And we're going to do more of this because we're getting a lot of feedback saying people want more scenarios around mortgage finance and upfront disclosure. Finny's a great business. It's so great that I invested in it. So they're my mortgage broker, but for full disclosure, I'm also a shareholder in Finny. But these guys do a good job. So I'm going to pick their brains over the coming period. Expect to hear a lot more about scenarios because people want to know the facts and figures around mortgage finance. They want to know real life examples of how stuff works. So joining me in the studio, and I'm going to get this wrong, and I promise over the coming months I'm going to work on this because my French accent's not great. And I practiced this before I come on air, Eva. And I've already forgotten how to pronounce your last name correctly in the correct French accent. Can you do it for me, Eva?
Eva Loiseau.
There we go. Thanks for joining us, Eva. How are you going?
Thank you. Thanks for having me. I'm great. I'm glad to be here and to share a bit of the finance industry and how to get into the property market today.
Yeah, it's great. And thanks so much to you and your team for the work you've done and you're doing inside of the Smart Property Investment portfolio. And there'll be a whole bunch of info coming where we're smack bang in the middle of working with a particular bank right now. And I won't disclose who we're refinancing 5 loans for. That's more to come, and I'll come in. That'll be one of the big case studies we do around this. These are properties, and if you're familiar with the Smart Property Investment Portfolio, the 5 properties that we're refinancing, we purchased about a decade ago, largely in the western suburbs of Sydney. There's some assets in Campbelltown, Mount Druitt, by memory, Penrith Way, and St Mary's. So I'm really excited about sharing that with you all. And Eva, the great work that you're doing for your clients. And I know it's a business that keeps growing and evolving and building with a particular eye for supporting property investors. Now, Eva, I want to have a chat, and it's really hard, right? Trying to get people who are happy to sort of be used for an example for stuff. So we've changed this person's particular name, but if they're tuning into it, they'll probably know that this is them. We're going to call this person Dylan. Eva, 23 years old, Dylan, currently lives at his parents' house. He's finished his carpentry apprenticeship. I think he's in his 2nd or 3rd year. I think you mentioned he's earning okay money, $65K per year, and he's on that trajectory, obviously, in our building trade to earn more over time. He's got very little savings, $5,000 no doubt. He's been spending that down in the pub or the RSL on a Friday and Saturday night. Fortunately, he has no debts. Eva, what was this particular client what was Dylan looking to achieve in having a chat with you guys in terms of mortgage finance?
Yeah, so actually at the beginning, I was dealing with his parents, and his parents said, well, our son would like to start buying properties. So I got referred to him that way. So when I met with Dylan, he said, I'd love to buy a house. I just want to get in the property market. I just don't know how. I don't have any savings. I don't really earn a lot. Properties are so expensive. I don't know what to do. It was a bit, lost as to what could be done, and he didn't really believe he could do anything. So that's how we started.
So his parents were encouraging him to look at property investment, or was that they were trying to get him out of the house? They wanted him out.
Yeah,
and
I think that was the main motivation, get out. But also to build his future, obviously. And it's true, it's getting harder. The prices are high, but there's always a way when someone wants to do something. So it was good to meet with him.
So you had a chat with Dylan and sort of got rather than secondhand information from his parents, you really got an understanding and appreciation for what he was trying to do. Was he generally interested in property, or was it more like, oh, my parents asked me to do it?
No, he actually really wanted to do it, but he, I guess, sort of knew that it was quite far from being able to. Only $5,000 in his savings. I mean, it's still something, but not enough to put a deposit down on a property in Sydney anyway. He knows, his income is, it's good for his age, but still not enough to support a debt for a property in Sydney. So it was like, look, I'd love to do it. I don't think I can. But we were able to look at it differently and see how we could eventually do what he wants to do. Maybe not just yet, but move things around for him to be able to eventually, maybe in a few years, get that house in Sydney that he wants.
Okay, so he wanted to buy a house in Sydney and you worked out that's not going to happen.
Not.
No, so sort of maybe that's a little bit further down the path, but his passion for property was still strong. So was the suggestion to look at investment property as part of a step towards potentially in time getting a principal place of residence? Where or how did that inflection point happen? Did you just say, have you thought about property investment?
Yeah, so we actually started with, okay, you don't have any savings. Maybe can your parents help you with that? And it was like, oh, maybe $10,000. It's not going to be enough. And then looking at his income and his way of spending, he couldn't afford anyway something, around $1 million that you need in Sydney. So we started thinking about, what about we start with an investment property at a lower price point and actually use your parents' property as a collateral to do so. So they wouldn't have to give you any cash. They wouldn't have to actually help you to pay the mortgage, but you can still get in the market right now without any savings. And he was like, oh my God, can I do this? I'm like, yes, you can.
And this is really important, and one of the reasons why we want to do, case studies like this, and we'll do it every couple of weeks or so, because we have a lot of young listeners, and I get a huge amount of satisfaction when I get feedback from younger listeners who are passionate about property investment but feel hamstrung because of, just the way the world works, and that is really expensive prices, and got to pay rent and all this sort of stuff. And I do a lot of podcasts with younger investors, and they're always like, yeah, you can do this stuff. And I don't think a lot of people know you can do it. And I think it's going to hamper a lot of people's ability to invest in property. So if we can open and widen people's awareness, younger investors' awareness around this type of stuff, the sooner you can get into the market, I'll tell you this, the sooner you get into the market as a property investor, the better off you're going to be. You get to, on the basis of you buying the right properties, you get to go through various different market cycles and move forward. So when you was chatting with Dylan, Eva, and said, we can actually use your parents' house, I guess, as collateral. You could leverage that to help raise enough money for a deposit or secure a deposit. Was he like, oh, that sounds great, or I don't know if that will fly at home? I reckon my parents would say no. Did you have to help him?
Yeah, so it was so exciting. It was talk that this could be an option, and at the same time, he was like, oh, maybe it's not going to work because I've got 2 other siblings, and my parents would want to do the same for everybody. And I said, well, let's chat to your parents. Let's see what they think, and then we go from there. And then we had a meeting all together. Parents were really excited to do it because they didn't have to provide any cash to them. They can actually do the same things for his siblings. You can do family pledge for 1 kid or 10 kids if you've got enough equity in your property to do so. And they don't have to repay the mortgage for him. So for them, it was tick, 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 tick. The only concern they had is that how long, are we going to be into it if we do a family pledge? So I had to explain that eventually the value of Dylan's property would be high enough that it would be enough to support his loan, and their property would be released eventually within a few years. And they were quite comfortable with that, and they were just so happy they could help their son to get into it right now.
So I want to break down this notion of family pledge because it sounds good, and we're sort of, in principle sort of spoke about it, but I really want to understand the mechanics of it. Eva, we're just going to go to a quick break. Back in a moment. Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show. I'm with Eva Loisance. She's the senior broker for Finny Mortgages, finny.com.au. How'd I go with that? Did I get it right?
Yeah, perfect.
Loisance. I have to channel my year 8 French. How'd you come out to Australia being a mortgage broker, Eva? What's the backstory?
The backstory is I came on holidays just to get a bit of a break in my studies. At the time, I was studying business law, and it was just, I guess, getting a bit boring, and I needed a bit of a break. So came here and met my husband.
And that's it?
Never returned.
Yeah. So Australia is now home. You're Aussie, you got the passport and all that sort of stuff?
That's right, yes.
Yeah. And what's mortgage broking like in France? It's very different, right? They don't have negative gearing, I know that.
I actually have no idea how it works over there because I've left before I was into properties, and at an age that, I was like 21 or something. So I wasn't really into that at the time. But I don't think there's many mortgage brokers there.
No. What is it about mortgage broking in Australia you like so much? I know we speak quite often. You're always sort of passionate and driven, and you get huge satisfaction out of helping clients. Yep. We're chatting about Dylan today, but what is it about mortgage broking that you love so much?
Yeah, it's actually, I think it comes from when I came here and I just didn't know how to get in the market, and actually met a mortgage broker that just was so great, giving me solution. And I just thought, I want to be like this person. I just want to meet someone and just help them get into it. And properties and finance is also a passion. So it's sort of all together. I just, that's just a job that works for me because I can do everything I like and providing solutions where people couldn't. So I just love doing that.
Well, I can see with this case study we're running through, and we'll do a lot more of this moving forward, so stay tuned on the Smart Property Investment Show with Dylan. So you flagged the idea of a family pledge. He's gone, that sounds great. You've teed it up with his parents and they've gone, we agree. So I want to actually understand what the family pledge means. So this is pretty much, is it putting the parents' house up as collateral or security against the person's ability to pay the loan off? How does it work?
So technically, let's take the example of someone buying a property for $500,000, just to be easy with numbers. You would normally need to come up with 20% as an ideal, so that's $100,000 plus the stamp duty, legal costs, and a bit of buffer. So let's say 120 that you need as a deposit. So Dylan didn't have this. Most people don't have this. So what you would do is $120,000 would have to be released from the parents' property. So technically, you only secure $120,000 against the parents' property. It's not the whole loan. It's only the portion that you needed to get into the market. So that portion would be secured against the parents' property until Dylan's property would be high enough in value that he can actually bring that back towards his property.
So does the parents need to refinance say they own their property outright, do they need to refinance to release that money in cash?
Yes. So if the house is paid off completely, they would have to actually give back the deed to the bank we'll go with. However, if they still have a mortgage, and let's say they are with one lender and we go with another, they would just have a second mortgage on it. Most lenders would accept to do that. So it's not actually, they don't have to refinance, they don't have to move their mortgage, they don't have to actually do anything except really agreeing and understanding what it means to do so.
Okay, and the idea being that at a point in time, we're talking about Dylan here, that he would refinance his property after a period of time when it's had equity growth, release that money, pay the parents back, the parents pay that back to the bank, they get the deeds back to the house if it was completely unencumbered.
It's not really a matter of paying it back, it's a matter of transferring that loan from a property to another. So it's not actually any cash being given anywhere.
Yeah. Okay. So, great for the first-time investor, get him into the market. And I personally know people who have leveraged the bank of mum and dad, is what they call it, to get going on property when they normally wouldn't have been able to. And they've been able to, one person in particular, really accelerate their ability as a property investor. And what a great way to head start. Only child, so a little bit easier. But, when you've got other siblings, as you mentioned there with Dylan, it can be quite tough. What is the risk for the parents if they go down this pathway of sort of supporting their kids into property investment?
So the question that comes up often is, what if I sell my property? If the parents sell the property, what happens? So it's not actually happening often because, it's like the family home and people have been living in there for a long time and generally keep it for still a few years after that. But let's say it happens and it has to happen, then Dylan will have to fund another security for that $120,000 that we just talked about. So it could be that his property has increased in value and it's enough. It could be that the parents are buying a new property and they could secure it against that. Otherwise, the risk there is that he will actually have to come up with some cash to reduce the loan to be able to cover that against his sole property.
So I reckon the idea of a family pledge is really good in property markets, which are booming. And if you've been in the markets over the last little while, most people saw 20, 30% growth. They might be thinking otherwise right now. It's only really an issue with property investment when you have to realise any negativity in your portfolio. So the idea is to hold on. It all comes down to buying really good assets, right? And this is a show about property investment. So the approach that you took then working with Dylan and his clients with the bank, did you have to get a pre-approval or did you find the asset first? How did that work?
Yeah, so Dylan was very actually skeptical that he would get a loan and he could. So we went through the path of getting a pre-approval first and then knowing that he would actually buy an investment property, probably in a market that he didn't really know. He went through a buyer's agent where he could actually select a property that had high capital growth prospect and also high yield. So in a way that the rent he would get would cover the mortgage pretty much dollar for dollar. So he wouldn't have to actually put any money into it. And he could start also saving for his next property. So once we actually got that black and white in front of him, he was so excited that it was something he could do.
Yeah. And was it sort of a painful process with the banks to try and get this set up, or is it pretty straightforward now? It's pretty vanilla, these type of loans?
Yeah, there's a few lenders that are absolutely great at it, some not so much, but if we can get it in with those lenders that are really good at it, it's not much more work than any other mortgage. Yeah.
I don't like giving specific lenders a plug, but any sort of lender who's really big in this?
Can I name them?
Yeah, go on.
Yeah, St. George pretty good at it.
Okay. All right. That's good. I don't mind St. George. I've got some loans with those guys, so they do a good job. What about rates, though, Eva?
Rates is the same. No loading at all.
No. So I understand this as an enabler to get people into property investment sooner. And you see it happening with the government all the time now. It's all about how do we get people into homes? Let's put this scheme in. Let's do this scheme. But this has been around for quite some time. It's not a new thing, right?
No, it's not new. I don't think people know much about it. It's not advertised much. It's not. And people, I think, don't really understand that there's no cash being given from the parents to the children. So it's like a little secret that needs to be out because it can help a lot. And it did help Dylan. He did buy a property and it's doing great. So
I want to ask you about what he actually bought, but I'm really interested on the psychology of it, of whether it's younger people sort of pestering their parents for this sort of stuff, going, hey, do you know this is available and we can do this? Or is it parents sort of pretty much going, it's going to get harder and harder to buy a property. So let's get you started earlier. And we have a real mixed bag of listeners to this podcast, people who are very new to investing and they're thinking about buying their first property, maybe like Dylan, who are younger. They might have some more savings or they might be saving more over time. You got sort of people who are sort of mid their investing journey. I'd say people like myself, I've still got, a good sort of 15, 20 years of investing before I start sort of realizing my portfolio. Then you got people at the back end of the property investment who are sort of thinking about replacing income from work and stuff. So how would you recommend, if you're at the sort of a property investor who have been doing this a little while and you've got some good equity in your property, and it doesn't need to be principal place of residence, right? You could do a family pledge against an investment property that you own?
Yeah, that's right. So the good thing to mention here is, those people in particular didn't have an investment property, but you could actually put an investment property as a pledge. You also, it doesn't have to be your parents. If your parents don't have a property, it could be your grandparents. It could be your siblings. I actually done one for a recently divorced father. So he just ended up with no properties and wanted to get back in, but no cash. We did it with his brother. So to get back in, without having to wait 3, 4, 5 years. Yeah. So
that's another scenario. So you don't have to be young. You can be at any point in time. You just need to have someone who is willing to pledge that assistance level. So let's just say, for example, I'm a property investor and I've got kids who are in their early 20s. How would you suggest you approach them saying, look, maybe don't go out and blow all your money on cars and holidays and stuff. Hey, let's get you down the property market route. We can do this for you. How would you approach that?
To talk to the child, you mean?
Talk to the child, yeah.
Yeah, I would just show them in black and white the numbers, what they would look like in 5 to 10 years. And probably starting with, just like with Dylan, it's not going to work if you don't do anything now. You're not going to be able to buy your $2 million property in Sydney if you don't have, some sort of backup already in place. So I think it's good to look at what's going to happen in the next 5 to 10 years and put a plan in now. It's possible. It's, Dylan is nothing exceptional in his situation. He doesn't earn crazy money. He doesn't have any savings. And yet in the next 5 to 10 years, he will be able to buy a property, probably without having had to save much money by himself.
So Dylan, you said, and we'll talk about the asset in a moment, but the rent largely covers the mortgage repayments. Is Dylan still living with his parents?
Yes, he was.
Yes. Yeah. Has he changed his saving habits? So he's actually trying to, has he got that bug now? He's gone, I understand how this works.
Yeah, I think
that's probably his real driver.
Yeah, he got quite excited and he actually said to me, it's like getting a tattoo. You can't just get one. And he actually is thinking already of getting his second property. So he started saving, I think, $300 a week, which is great because he wasn't doing it before. And he very often comes back to me asking if his property has increased in value, how much equity is in there, could I go again, when can I go again? He's really excited about what's possible.
Yeah. What's he doing with his savings? Is he putting into a redraw or an offset or something?
Yeah, so we've created an offset account with his loans. So every bit of money that goes in there also helps him save on the interest payable every month, which is very important. And, as that is building, he pays less every month. And he's got almost $18,000 right now. So it's going up, and he's, very keen to get it going.
It sounds so simple sometimes, right? But it's just really, it's really funny and I have done hundreds, if not thousands of interviews with property investors when they start understanding how this works. It's like they've unlocked this secret that no one else knows about, and they get so hungry and passionate. And no doubt, if you're tuning into this, Dylan, little asterisk, not your real name. We don't want to give too much away, but you know who you are. Continue to embrace education around property, and people obsessed with it. It's so funny, and I really like people getting obsessed with property investment. The inverse of that is that people get so obsessed with property investment that they never do anything because they just overthink and overcomplicate everything. So it doesn't necessarily need to be complicated. Property investment is largely quite simple. Now, let's have a chat about what Dylan got. Let's just go to another break beforehand. Stay with us, everyone. Back in a moment. Welcome back, everyone. It's Phil Tarrant, host of the Smart Property Investment Show. I'm with Eva. Low essence. It's really funny. Like every now and then, something happens in my brain and I can't get stuff out of it, and particular words. But Eva's senior broker at Finny Mortgages, finny.com.au. We're chatting through Dylan using a family pledge, where his parents have sort of fast-tracked him into property investment, which was really cool. So what did he end up buying? When did all this happen, by the way? Eva?
That happened, I think, 10 months ago now.
10 months ago now. Okay, so what did Dylan buy?
So he bought a property in Queensland for $480,000. That was the purchase price. Great yield. He got I think it was $470 per week rent. So just over 5%. Yeah, just over 5%. And he borrowed the whole amount. He borrowed over $500,000. So he didn't have to put any of his cash in. So yeah, it was just quite easy for him to get into it. And we know the property market up there is quite strong. So it's
Yeah, it's been, like, compared to other parts of Australia, it's performed well over since May of last year when they started ratcheting up interest rates. Has he sort of hurt him a little bit? No doubt the rate's gone up over that period of time, but a lot of that would have been factored into his serviceability and stuff. Is he having to tip in now money into it, seeing that rate's probably gone up 3%?
Yeah, so at the very beginning, he was actually making money of having it. Now it's costing around $45 a week to keep the property, which is more than manageable for him. So it's got no issue doing that. And knowing as well that the interest payable is tax deductible, so he will get some back at the end of the year. So he's quite comfortable with that.
Yeah, and that's the sort of power of negative gearing, no doubt, on a salary of $65,000. And I reckon that's probably going up because carpenters are pretty in demand. His after-tax situation will be very different to his pre-tax situation. So no doubt he's got a good accountant in there helping him out. So what's the next step for Dylan? Is he just going to save his money, try and find a time to release equity, buy another investment property with this dream of maybe one day buying in Sydney?
Yeah, so really, as you said, got the bug. So he's constantly trying to fast track how he can get to the second property. So that would be part savings, part equity in his property, which, probably the next year or so, that's probably going to be an option for him to buy something, in the same price range, I'd say.
That's good. Eva, it's a really good case study. I like how you've put this together, and it goes to show every property investors come in all shapes and sizes, right? So this is someone at the early part of their property investing career. This is getting him into the market, and it's absolutely critical. As I said, the sooner you can get in the property investment, the better off. If I had my time again, I would have tried to have bought an investment property before I went and spent a decade traveling around sort of doing stuff outside of Australia, and coming back after a decade of growth would have been really nice. But you can do all that stuff these days, right? If you work a couple of years, maybe get a family pledge, get yourself an investment property, you can pack your backpack and take off into the world knowing that you've got an asset here in Australia. So if I had my time again, I would absolutely do that. What Dylan chooses to do, who knows moving forward, but really good case study. I think we can really mix it up, the type of stuff that we can do. This is obviously around a first-time investor, but you have a lot of people who, even no doubt you see it all the time, the clients you work with at Finney Mortgages, they sort of hit this threshold or cap on their serviceability. There's no more to do. Let's chat about some scenarios and strategy for them. Let's chat about some people who are looking to grow their portfolio aggressively. Let's look at some people at the back end of their sort of portfolio creation and start thinking about paying down some debt as well. So there's lots that we can cover. We can also field any question from any of our listeners, anything you need to know about mortgages, all the questions that you wanted to ask and you never want to, or something I even think is just so silly that you don't want to ask it. We'll get it answered on air with Eva, editor at smartpropertyinvestment.com.au. Send your questions there about anything to do with mortgages. And if we can't answer it, you know what, we'll find someone from a bank or some sort of bank CEO to come and answer it for us. So happy to do all that sort of stuff as well. It is a game of property investment, is a game of mortgage finance. Put your mortgage finance first. Eva, how many people come to you? I'll conclude with this question going, I want to buy a property, can I get a mortgage? And they are so far away from it because their house is in a mess. They're self-employed and haven't done tax returns for 3 years, or they're ordering Uber Eats every single day and, oh yeah, I can cut that back. Don't worry about it. It's okay. It's so important to be prepared, isn't it?
Yeah. So it's every second person's got there's got a bit of a story there that makes it a bit more complex than it should be. But there is actually a lot of options available. You don't have to be like what we call a vanilla deal to get finance. There's options for self-employed, there's option for expat, there's options for people on contracts, people that just started a new job, people that are casuals. There's options, and the issue is most of them, they go to their bank, and their bank sometimes don't have an option for them, and they just think it's going to be the way everywhere. So those people need to talk to a mortgage broker that has more than 40 plus options to look at. There will be one there for them, and if it's not today, at least we can put them on the path to get there eventually, so they know how they can get there and not just give up like Dylan was doing a little bit. It's like, oh, it's not going to happen. Probably betting that eventually he would get his parents' property and that would be it. So,
yeah, that's cool. And I know companies like mortgage brokers like Finney, 40 plus different lenders you work with, as many as pretty much you can find a lender for anyone, which accounts for thousands of different mortgage products. And if you have gone to the bank and the bank says no, you're tapped out. If you've gone to the bank and the bank's gone, yes, we want to cross-collateralize all your other mortgages and put it all together, go and get a second opinion. I'm not a bank basher by any means. Banks do a great job. I've got many mortgages with many banks, but the clout and power of a mortgage broker is they can really understand where you're going, how you're getting there, your financial position, and match you with the most appropriate lender and most appropriate product to suit your needs. If you go to a bank, they've probably only got a handful of things they can offer you. If you don't fit their little cookie cutter, you're probably going to get a no. And that's specifically the case for property investors, experienced property investors who might be knocking on the door of being tapped out or self-employed people. So go and speak to a mortgage broker. Eva, if anyone wants to specifically have a chat with you and your team, what's the best way to get in touch? And you're happy to chat with people who just want info about, look, I'm not ready to borrow now, but I need to know what I need to do to get my stuff sorted out so I can borrow. What's the best way to get in touch?
So they can call our reception line, book an appointment. They can, I don't know, actually, I guess that would be the best way to book a time to chat, even if it's 5-10 minutes, just to check the capacity, check the option, maybe just give them a bit of an idea they didn't think of, so we can put them on the right direction there. Okay. Yeah.
Cool. All right. So I guess the best spot is to start at finnymortgages.com.au. You can contact and do all that stuff there, I imagine. Yeah. Okay. All right. Sounds really good. Let's work up a really good case study for a couple of weeks' time. I look forward to it. Eva Loisance. I got it now. Eva Loisance, senior broker at Finney Mortgages, finney.com.au. Thanks so much for your time today.
Thank you. Thanks for having me.
Nice one. Thanks for joining us, everyone. I've got my practice to take place, getting Eva Loisance's name. I don't want to make it a deal, but I already have done now mentally, so it's probably something I struggle with moving forward. Be better next time. Don't worry about it. Remember to check out smartpropertyinvestment.com.au. Remember, the key thing to take away from this particular podcast, get your finance sorted out. Finance first before you even start thinking about property. Know what you can borrow. Know what and how you can get that funding. Know what you need to save, know how you need to structure. All that stuff becomes before asset selection. Get it sorted out. Go and speak to a mortgage broker. Absolutely. Remember, Smart Property HQ on social media is where you'll find us. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Have you signed up to HR Leader? Go to hrleader.com.au to subscribe. Receive the latest HR and people leadership insights and news.